Everyone's favorite real estate topic over the last year has been interest rates. Where are they going and what does this mean for my investments? Through Keyspire, our team was introduced to Lorenzo Podda, a mortgage specialist with BMSelect. With extensive knowledge on mortgages and being a real estate investor himself, we're excited to have Lorenzo on the show today to share his outlook on interest rates and the current real estate market. Lorenzo, thanks for joining us. It's good to see you, and thanks for having us being on the show.
Oh, no, appreciate it, guys. Thank you guys for having me. I've been looking forward to this. It's awesome.
Still have the coffee mug you gave us from the Keyspire conference.
Yes.
So I had a cup out of that the other day.
Love it, man. Make sure you guys keep using that. It's awesome.
I grabbed a glass. I should have grabbed the mug there.
I'll get you another one. Next time we're back for the November conference, I'll get you a mug.
Please do. So for the first time this year, the Bank of Canada has decided to not raise interest rates. Is that what you expected? And where do you think things are going to go from here?
Yeah, definitely something that we did expect was going to happen, a kind of a pause on the interest rates for the last announcement they came out with. They kind of gave us that precursor in January where they said, hey, we think after that last 25 basis point increase, they came out and basically said, we think we've done enough. And right now we're going to be putting a pause on the interest rate hikes until obviously we see how inflation starts playing out. Now, the good news is that inflation is starting to come down. So we are starting to see those downtrends, which the next announcement could be coming out in, I believe it's April. Coming out in a week here. So once that next announcement comes out, hopefully we'll see something in the mid fives. Ideally, we're at 5.9 right now. If we get another decent drop, which could be a good likelihood, obviously it means we're trending in the right direction towards the bank's target rate of 2%. So as soon as we can hit that, obviously the inflation alarms typically will go off at that point. We'll kind of be status quo again. But I think honestly, they're going to be okay keeping rates status quo right now as long as we keep trending in the right direction. Now, obviously, Tiff Macklem and the government did come out and say if they think they need to keep going, they will. So again, it's just going to be watching those CPI charts, watching that inflation to see where that's headed. And ideally, that's going to kind of tell us where we're headed toward interest rates. So hopefully, I think this year we're going to start seeing, obviously, it's kind of more of the same. We're still seeing stuff in the U.S. now, especially with everything that happened yesterday, that you might see it maybe a 25 basis point drop at the end of this year, potentially, just because of everything that's going on right now. So I do think, obviously, in the long term, we're going to be staying roughly the same this year. Not too many hikes, probably not any, if any. And then maybe a slight drop, but likely the same this year. And you'll start actually seeing a lot of those drops in 2024.
Thanks for the crystal ball there. Appreciate it.
Yeah.
And obviously with this pause within the rate cycle here, it's given some confidence within the market. If you've got any realtors on social media, they'll be the first ones to tell us the market's picking up. You're on the lending side of things, so you're seeing deals come through when it's actually pen to paper. They're getting the financing in place. Are you seeing more activity, or is it just realtors out there tooting their horn?
No, there's definitely some more activity out there. We're seeing a ton of, honestly, like on our business, we call them pre-approvals. And basically what it just means is buyers getting ready to buy to actually find a property. There's obviously a huge lack of inventory, especially in Ontario right now. I'm sure BC's roughly the same. So obviously a huge lack of inventory. So we have a ton of people. We're pre-approving probably over 50 people a week, just saying, hey, here's what you can buy for. Like, let us know when you have an accepted offer type thing, getting them ready to buy, getting all of their ducks in a row. So there's a lot of pent up kind of buyers that we definitely know are looking to buy. And so now it's just obviously if there's inventory to service that, and also do the numbers make sense? Because yeah, we can tell someone they're okay to buy an $800,000 house, but obviously that payment's pretty tough to deal with right now. So a lot of people, it just depends if they're in that position to buy, but we're definitely starting to see some pickup there. A lot of investors kind of more or less sitting back waiting to see how this is going to play out. But then a lot of those regular home buyers now having a chance to kind of get involved in real estate. And so we see a lot of those first-time home buyers selling buys. That's been pretty active for us lately.
Yeah, definitely. I think everyone was waiting for a little bit of good news, and with no rate hike, I think that was the news as well. And with some of these pricing cooling off, it really does present that opportunity for people to get in the market at a better price. You know, we talked about before we jumped on here, 2021 was an extremely hot year. What does business look like over the last year for you and BMSelect?
Yeah, so 2021 was obviously crazy hot for everyone. 2022, to be honest, brought a lot of the same for us. It was the first probably 7 months of the year we were actually beating 2021. So it was started off really good. And then obviously inflation ends up peaking at 8+%. And then rates start getting jacked up. And a lot of that first increase too, then you saw a 75 basis point and then a full 100 basis point increase, put a big pause on the market and stop. So we've definitely seen a lot less activity out there. And obviously we've shifted our business a little bit too into what makes sense for people, right? If you don't have to move generally at this point, you're not necessarily looking to it, especially maybe now it's a little bit different, but especially the end of 2022, that was the case. So we definitely saw a slowdown. The whole real estate industry did. And so now it's just kind of riding that wave out, and hopefully kind of the spring market is going to start picking up again, and we'll see how that plays out.
What is BMSelect, and what kind of services do you guys provide your clients?
Yeah, so we're BMSelect's a full service mortgage brokerage. So myself and my other partners, Dave and Dan are founders, and then Michael Zanzini, one of our other partners as well. They're two sales agents. So we obviously started BMSelect, and it's a full service mortgage brokerage which primarily deals with real estate investors. So anyone that's looking to basically either start a new real estate portfolio where you only own your principal residence and trying to now build a way to acquire 10, 15, 20, 30 properties. We work with you step by step to be able to grow your portfolio, how to best navigate the banks in order to do so, and kind of provide that full service aspect on how to basically grow your portfolio. At the same time, though, we don't just deal with real estate investors. We deal with first-time home buyers, people looking to sell and buy. We're pretty big team, so that kind of allows us the ability to work with anyone who's looking for a mortgage, basically. So if you're anyone trying to find a mortgage or have a renewal coming up, definitely able to help on the rate side and also on the commercial side too. If you're looking at multifamily, CMHC finance, we've a pretty broad scope in the mortgage side, obviously specializing in the investor space with residential and commercial, but then being able to work kind of the mortgage across the board.
Awesome. Yeah, full service. It looks like you guys are a tight-knit group over there, just running into each other at some conferences. So it's good to see. Getting financing for some of these properties can be a bit scary, especially for first-timers. Really, what are the main benefits of working with a mortgage broker rather than going to maybe an individual bank and trying to get a mortgage for a property?
Yeah, it's a great question because I talked to a lot of people about this a ton. So some of the biggest things too, why I just suggest, not necessarily even if you're using myself or our team, if you're using even a different mortgage broker, you always want to deal with someone who has options. And so when you walk into your bank, yeah, that bank might be a good fit for you, but also might not be a good fit for you. But that person in there is only going to be selling you on one product, which is the bank's product. Dealing with a mortgage broker or someone who can deal with multiple lenders, it's basically coming to us now saying, hey, here's a buffet. What do you want to eat? Because now we're going to be able to take your deal and find the actual right fit for you, not what the bank thinks the right fit for you is. So obviously, especially if you're someone that's becoming a real estate investor, a lot of people don't know this, but every bank, especially the major 5-6 banks, have different rules as to what they'll allow, how many properties they'll allow you to own, how they'll qualify you to buy those properties. So if you're only sticking with a bank by like going to one bank, then that might hinder you being able to buy the next couple. So for example, just to throw a TD has a rule where they'll cap people at five properties typically. Sometimes they'll go higher to 10, but typically they'll only allow you to have 5 properties and only have 5 mortgages with them. Where Scotiabank, on the other hand, will say, hey, we'll let you have 10 properties total. This is all residentially, but we'll let you have 10 properties total, but we'll finance only 5 of them. Well, if that's the case and someone's trying to build a big portfolio, especially on the residential side, and they go to Scotiabank for their first 5 first, well, now they're a little bit hindered on the next 5, right? Because they could have been using a TD or an RBC at a time. So being able to go to someone with access to every lender and also the knowledge of how to kind of work it, not just selling you their own products, a huge advantage.
And I think that's a really important part to touch on when we hear about financing. We obviously think of the big banks, but then you talked about different categories of lenders. Do you mind sort of breaking those down and what those different categories are and sort of how that changes the lending profile for investors?
Yeah, absolutely. So yeah, it starts off kind of what everyone likes to hear, the big banks or the A lenders. So what an A lender is any of the big banks. So a TD, Scotia, RBC, CIBC, National Bank, BMO, those are the 6 major ones. And then there's also what people might hear called monoline lenders. So that's a First National, MCAP, Home Trust. Those are like monoline lenders, and they're smaller lenders that basically provide A rates or very good interest rates, but they're simply mortgage lenders. They don't really have you can't get a bank account with them. Most of the time you can't get certain products like a line of credit depending who the lender is. So they're very niche lenders in a sense where they'll only do mortgages. Now they're really good. They do great mortgages, do a great job on the A space, and a lot of those smaller ones are very competitive with with interest rates, especially if you're someone just buying a first time property, or you only own an owner occupied and you're just buying a new principal residence to move into. So those are a good option too, but that's typically the A lender space. And to qualify for that type of space, especially in the residential field, you're looking at, it's all about debt servicing ratios. The bank basically, or the bank or the monoline lenders kind of set a box, and it's your job to now fit inside that box on if you can qualify. Then obviously someone who can't qualify for an A lender for whatever reason, we then look at what's called B lenders, or alt A lending, but most times just referred to as B lenders. And that would be a lender like Equitable Bank. Home Trust has an A and a B side. They're very big on the B side. So those are two kind of examples of B lenders. And what they basically allow for is they're great for people who are self-employed. So if you don't claim a lot of income, obviously on your taxes, that's what the A lenders like to see. The B lenders understand that, use a lot more common sense based lending. They're very big on property type, right? Because the applicants might have bruised credit or not a strong income. They're more comfortable as long as the property is a good property that they are comfortable with. They'll lend on things like that. The rates, obviously, as you go down the chain, are a little bit higher too. So obviously, if you stay A lenders best rate, B lenders we're seeing right now usually about a 1% to 1.5% at most higher than the A guys right now. Sometimes they're actually pretty close right now too, crazy enough, depending on the lender that we're going to. And then they do charge a small 1% lender fee. So again, it's another avenue to be able to get mortgages for people who maybe can't qualify with the big banks. That just allows them to get into real estate. And honestly, the B lender isn't that much more expensive than the A side is definitely paying for. If you can get to an A, you want to, but that's kind of where the B space hits. And then if you can't qualify for A or B, then we kind of have what we call C lending, which is private lending. So let's say, for example, you've lost your job, you've racked up a lot of debts, obviously credit card, unsecured line of credit, just trying to make ends meet, and you're looking for a solution just to kind of band-aid solution just to kind of get you the next 6 to 12 months. A private option is typically really good for that, where if you have equity built up in your home, you can find a private lender. Obviously, rates and fees are going to be definitely higher than obviously the A and B side, but it's a good option for people looking for a small band-aid solution to get them through the next 6 months or a year. They're also great for investors looking to do flips or different property types that maybe traditional banks won't like. There's always a fit for a private lender. So it's definitely a good option if you need it. And obviously, as you go down the chain, it's a bit more expensive.
It's a great breakdown of the different categories there. I think a lot of people only think of the big banks when they think of that, but there's many other options. And to touch on our previous question, one of the reasons why working with a mortgage broker can be a lot of help. And when discussing a mortgage, really variable rate versus fixed rate is a major consideration that you look at when purchasing a property. What financing terms right now are you recommending to your clients?
Yeah, so when we're discussing rates, because you're right, it's an absolutely huge conversation right now. The very first question I like to ask the client is, what is your plan for the property? Because if you're coming and saying, hey, listen, Lorenzo, I'm probably going to try to flip the property in the next 6 to 8 months, or I might do a big renovation, want to refinance in 4 or 5 months, maybe add a secondary unit or things like that. Well, then it's something we want to talk about, potentially looking at a very penalty-friendly rate, something like a 5-year variable, where the penalty is going to be 3 months interest to break it. We'd set up products like lines of credit for you just to have a very penalty-friendly mortgage. Now, if you're not looking to break the mortgage anytime soon, or you're looking just to kind of buy and hold the property, you think you have at least, I would say 2 to 3, maybe 4 or 5 years in it, if not longer, then that's when you kind of want to start weighing the options fixed versus variable. Now, today, when we're at 90% of our deals, and especially with the market volatility and where rates we think are going to happen, especially where inflation is trending, we want to see some people take rates that are very flexible. So when we talk about flexible rates, it's the 5-year variable, which obviously you can move into a fixed rate at any point with no penalty, and it's very easy to break. Or I like a 1 or maybe a 2, but typically a 1-year fixed rate. Now, the reason I like the 1-year fixed rate is because as of today, it's actually in a lot of cases lower than the 5-year variable rate. So it gives you a static payment locked in for a year. And then now in a year from now, we're basically a free agent again, and that can then reevaluate where we're at, where the rates are at in the market, and ideally lock in a lower one should they become available, or you can just simply renew at that point as well. So trying to stay flexible, even though the 5-year fix is more attractive right now than a 1-year fix. It's actually a lot lower. It's a little bit of a trick that the bank's using to try to lock you into that 5-year right now, because they want you to be stuck at a mid to high 5% rate, so that you're not able to break or have to pay a huge penalty to break if rates do end up coming down. So we do like the shorter term fixed options right now for sure.
That's a great point there about the 1-year fixed. It's a couple times now that I've heard it from some top mortgage brokers is a nice strategy to kind of hedge against some of the volatility of the variable payments and kind of lock them in. And then I like the word there, you're a free agent next year and you're ready to go test the open markets.
Exactly. Yeah. Exactly.
For people that do sign up for these fixed year rates or fixed term rates and they want to go break them that aren't aware of the penalties, just highlight on a general basis what that on a cost perspective could look like for someone that breaks a longer term mortgage.
Yeah, definitely. So the way a fixed rate works to break it, so if you can break it, so most of the time, I guess to start out, there's some lenders, so always be careful what you sign into. There's some lenders when you're signing a 5-year fixed or even a 5-year variable for that matter that say, we're giving you the absolute best rate we can, but because the rate is going to be so good that we can give you, we're not allowing you to break this mortgage no matter what during your term. So definitely, so we call those no frills mortgages where they don't give you the ability to break and there's not a lot of products associated with it. Now, if you're in a typical fixed rate mortgage, the penalty to break that mortgage is called interest rate differential, IRD. And basically what that means is that the bank's going to, when you come up to break your mortgage, the bank's going to basically take a look at what your rate currently is, how much money they're making off of you, and then what the new rate in the market is, the rate that they'd have to re-lend the money out. And if there's obviously a loss to that, which most of the time there will be, they're going to charge that difference to you. Or they'll charge you a minimum. Let's say there is no loss to the bank. They'll charge you a minimum of 3 months of interest payments just on that mortgage. So obviously where that gets kind of dicey, if you're in a 5-year fix, and we saw it during COVID, especially people were taking in 2018, 5-year fix at 3.59, 3.79. When we got to 2020 and rates all of a sudden went down to 1.5%, or you'd seen 1.99 fixed or 1.59 5-year fixed rates, people were trying to obviously break the rate, get into a lower rate. But what ends up happening there is I was seeing penalties sometimes $40,000, $50,000. So at that point, now you have to really decide, does it make sense to break that mortgage and fork over the 50 grand? Sometimes it did, sometimes it didn't. So obviously it just depends on your current situation. So when a market like we're in today, if you're in a long-term fixed rate, but looking for, if you're in a good long-term fixed rate, obviously the best move is to stay where you're at. But if you're someone that has to make a move for some reason, not a bad time to be able to break your fixed rate, because obviously the rates right now are much higher than likely you were to sign into. So your penalty shouldn't be too big.
So it sounds like, if you invest into a fixed rate at a low interest rate, really the risk isn't too high, because you can go and refinance at that higher rate and only pay that 3% differential. Is that correct?
Yeah, correct. So yeah, depends on the timing, depends on the rates. So obviously the bank can basically calculate the payment any way they want. Yeah. Now, correct though, if you're in a 5-year fix and you need to break today, obviously the rates are likely a lot higher. That penalty is going to be significantly less than obviously if the rates were inversed and you were to break it maybe in 2 years from now when the opposite's going on.
Got it. Thanks.
There's no Walmart price guarantee. If rates go down, they'll match it on the way down.
I wish. You see it around. Obviously, everyone does their best to kind of compete in that rate space, but yeah, I wish.
And in addition to helping your clients invest into these different properties, are you a real estate investor yourself? And what kind of properties or investments do you focus on?
Yeah, so yeah, I definitely invest in real estate. So I bought my first property when I was, it was an income property, rental property when I was 19 years old. So it was a duplex in St. Catharines. Actually, I like the idea of being able to kind of rent out both units, kind of cash flow on it. So that was kind of how I got started. And then a couple of years, obviously over the past few years, been investing as well. So it's kind of been both in the stock market and in real estate. So definitely been slowly growing my real estate portfolio. I have a couple properties now, purchased also a few, like a new builder too, just kind of see obviously a little bit on speculation there to see where the market has got a couple of good deals. But yeah, I'm definitely a real estate investor. I think that's going to be the way to go long term for people. The stock market's great, just obviously tough to trust, and kind of anything can happen at any point. So a little bit of a casino there, which I like the idea of real estate where, there's, even if the value of your property goes down, if you're buying a good income property, then you're going to be cash flowing every month no matter what. So I like the idea of real estate for people. It's a really good, obviously, storage of wealth too, good transfer of wealth. A lot of very wealthy people, I'm sure you guys talk to very wealthy people all the time. Most of them have some sort of real estate holding. So I really like real estate.
It'd be hard to sit there and look at real estate files all day and not have to give it a little taste yourself. And so, being focused in Southern Ontario there, what is the biggest area of opportunity do you see today? Is it in Ontario? Do you see it somewhere like Alberta? Are you looking in the US? Where is a focus to you? Where do you think
Yeah,
where do
so
you see
a
opportunity?
lot of it depends on kind of who you are. Basically, we are starting to see a good influx of investors doing kind of buying properties, especially multifamily commercial out west in those kind of Alberta markets. Obviously, I heard great things about the kind of the landlord tenant board there. In a sense, obviously, they're very efficient. And then obviously the prices are way cheaper, so the cash flow is typically a lot better. So we're seeing a lot of stuff now coming to us in Alberta and a lot of stuff out east as well in those maritime provinces. Definitely investors are kind of not wanting to pay these high Ontario prices and heading out that way. So that's obviously starting to increase. And then so there's definitely some opportunities there. But that said, there's still tons of opportunities in Southern Ontario here, especially if you're I guess a couple aspects. You're a first-time home buyer. This is now a time where there's finally not going to be 45, 50 offers on a property, where you might be one of 3 offers on a property. You have to give you a little bit more leverage. We're seeing financing conditions come back, so you're not having to take a huge risk on going in firm, not knowing if you're going to get approved by the bank and getting stuck with a crazy private mortgage. So in that sense, there's some really good opportunities there. And then obviously with the rates going up, there's people who were definitely put in tough situations that are being forced to sell. So we're not seeing it. I'm not seeing that a ton right now, but I've definitely seen a lot of situations where people have been kind of put into spots where they're having to sell. And even on new builds, for example, we've had a couple deals come by my desk where someone's bought them on assignment. The place was like originally sold at I think it was 2.05 million, and our client picked it up at 1.95, and that was a year and a half later, basically. So someone bought the new build in the hype of the market, maybe couldn't close for whatever reason, now having to take a little bit of a bath to resell. So if you're someone that's been kind of sitting on the sidelines ready to kind of put your money to action, definitely might not be a bad time to find the right deal and do it.
Awesome. Well, Lorenzo, it was great catching up with you here today. I think all this insight on the Canadian real estate market as well as interest rates will really be of value to our listeners. You can get in contact with us if you have any questions for Lorenzo at BMSelect or reach out to him directly. But again, really appreciate you coming on and sharing this with us.
Awesome, guys. Thank you. Pleasure being here, man. A great time.
It's a lot of fun. Thanks for doing this.
Thank you.